Good afternoon, traders. Welcome to the Moy Analytics Afternoon Energy Podcast for January 28th, going into the 29th. Hope everybody had a good day trading today. Okay, we're going to start off with the natural gas. We were bullish from 281.10, which had been rolled into the February contract from the previous contract, and February went out with a high of 782.70, attaining a little bit more than the $4.62.8 from there. A number of other bullish calls in here. I'm not going to concentrate on those right now because we had such a large spread differential between the Feb and the March. I did warn in the March on January 21st that trade above 348.10 warned a much higher trade. We've seen 516 ticks from the 348.10 line before holding exhaustion up here at 399.70 and rolling over 421 ticks. The trade above this 373.50 minus 3.2 per hour line here warned of strength, and we've seen strength up to 389.90 before rolling back over and holding the line. Decent trade above this formation right here, which is going to come in at 387.40. Minus 1 tick per hour starting at 6 o'clock p.m. Eastern Standard Time will warrant decent strength. If we break above there decently and back down through it decently, look for decent pressure to come in. I would caution we may be in the last stretch of this move up from the lows, with possible exhaustion up in here at 411.80, 411.10 to 411.80, and then other exhaustion above at 425.70 to 433.30. Okay, and the crude oil on the day, this warns of pressure before / if resuming higher if we don't take out the high of 63.52. In general, we're bullish though. We held exhaustion with the 54.89 low and rallied $8.28 coming into this morning, and then another 35 ticks on the day as well. A number of other bullish calls in here. Some of these have been fulfilled. Some of the projections, meaning the break above 58.69 projected this upward $1.10 minimum, $4.65 plus maximum. We'd attained 448 of that coming into this morning. But we also got another 35 ticks on top of that, fulfilling that. But there's also a plus on it, so we could see more. The trade above 58.72 projected this upward $1.10 minimum, $3.90 plus maximum. We detained 445 of that coming into this morning, and then another 35 ticks in addition to that. Then the trade above 61.55 brought in $1.97 so far. I warn we may be in this last stretch up from 54.84, but we've taken out this exhaustion, possible exhaustion of 63.08 to 63.19. We'd held that briefly here with a 63 high and rolled over down to 62.04, but we've taken that out. Next one up here is going to be at 64.07 to 64.47. Decent failure. Excuse me. Decent failure back below this formation right here, which is going to come in at 62.10 minus plus 1 tick per hour, starting at 6 o'clock p.m. Eastern Standard Time. That'll warrant a decent pressure. A maintained gap lower tomorrow will leave a minor bearish reversal above. Be aware we are approaching a fairly significant line up here that's going to come in at 64.44 to 64.46 through tomorrow. Decent break above there, a warn of continued strength likely for days. Okay, and in the RBOB, a maintain gap lower tomorrow. We'll leave a minor bearish reversal above. We're likely in the last phase of this stretch upward. But if we take out $191.29, that'll suggest that this structure has more longevity. And in the RBOB, by the way, I just wanted to highlight this. I said that we held an equivalent exhaustion at 169.78 low. With that 169.78 low, and it bounced 20.88 cents coming into today. And as you may recall, if you go back in the analysis back to when I first called that, I warned that if this is the beginning of a bullish correction, it should exceed 20.3 cents from the 169.78 low, i.e. a minimum target of 190.10. And we took that out this morning at 190 with a 190.66 high, and now we're trading 191.29. But that was a fairly substantial call from here upward. So I hope you got a piece of that. Decent trade above this formation right here is going to want continued strength. That's going to come in at 190.18, minus 0.4 of a tick per hour, starting at 6 o'clock p.m. Eastern Standard Time. If we break above there decently and back down through it decently, I'd be out of all longs for the time being. It's short, looking for pressure to come in, possibly for days. Decent failure back down below this line would also be bearish, which is going to come in at 187.87. Plus 4.5 per hour, starting at 6 o'clock p.m. Eastern Standard Time. In the heating oil, maintain gap lower tomorrow. We'll leave a minor bearish reversal above. And in the heat, on a short-term basis, we held exhaustion with a 204.69 low. We rallied 65.76 cents. That was in Feb, and that's we rallied up to 245.72. This was in the previous contract in Feb. And we had a number of other bullish calls in here. And the Feb actually has rallied up to 270.45. In the March, these are all being updated still from the Feb calls because the Feb is still on the board, even though we've rolled into March. I did warn in the March, maintain gap higher, we'll leave a minor bullish reversal below from on January 16th. And from the 223.10 open, we have rallied up to 245.72. The trade above 234.85 also brought in straight back up to 245.72. That was the break back above this line. So we've seen a decent move out of that. I did warn that we might be in a possible last stage of this move up, but I would also caution if we take out 248.16, that suggests that this structure has more longevity. Decent trade back below this formation will warrant a decent pressure. That's going to come in at 237.99 plus 9 ticks per hour, starting at 6 o'clock p.m. Eastern Standard Time. Okay, in the Brent, maintain gap low in there tomorrow. We'll leave a minor bearish reversal above. Trade above 59.69. Has brought in strength up to 67.59. A lot of other bullish calls in here. And the excuse me, that's retained more because that was from the March contract. March contract actually had a high of 68.62. In the April, those all rolled into April. Trade above 65.32 put us above a similar formation in the April to that of the March at 66.49 to 51, which projects us upward 80 ticks minimum, $7.70 plus maximum. And like I said, we've rallied from 66.51 to 67.59. Excuse me. We've rallied from 65.32 to 67.59. Decent trade back below that line will warrant decent pressure. That's going to come in at 65.27 minus 0.1 of a tick per hour starting at 8 o'clock p.m. Eastern Standard Time. I would also caution at the same time, we may be in the last stretch of this move up from the lows. We've taken out this exhaustion level. The next exhaustion level comes at 68.29, and the next above that comes in at 70.25. And the gas oil, to maintain gap lower tomorrow, we'll leave a minor bearish reversal above. Tomorrow has a good likelihood of seeing range expansion. We held exhaustion with a 596.25 low and rallied to 693.50. But that was the Feb. The Feb actually rallied up to 704. So those all roll into March, and then the March, the trade above 68, 685.50. Excuse me. That's a warning for the downside. 704.47. Decent failure back below this formation right here in the March, which is going to come in at 686.22 plus 8 per hour starting at 8 o'clock p.m. That'll warrant decent pressure. Cadence going into tomorrow is the heating oil is the strongest of the three, the RBOB in the middle, and the crude the weakest of the three relative to one another. Maintain gap lower tomorrow in the heating crack will leave a minor bearish reversal above. A maintained gap higher and the RBOB crack will leave a minor bullish reversal below. I'd also be aware that this may be at the end of this road down for the RBOB to heat spread. So a maintained gap higher in there would leave a minor bullish reversal below. Those are all key dynamics to pay attention to. Okay, thank you for watching. I hope you have a good evening, and I'll see you on tomorrow's podcast.